Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review where we shall be analyzing the 9th Commitments of Traders Report of 2020. And as we always do, we will be starting off by looking at the largest changes in commercials positions. And you may see we have the euro on top of our list with a huge 32% change over there. In their positions, 27% change in large speculators positions. There's no question that these changes are amongst the largest changes in the past 1 year. The only question may be whether or not this bullish signal can take further effect on the market. Maybe if you remember, CFTC publishes these reports on Fridays, but it is actually showing you a picture from Tuesday. So that's exactly from where the data is collected from. And we've already witnessed a very nice rally in the market. If we move on to the 5 years chart, you may see that we're gradually getting closer and closer to bullish COT extreme levels. Now, one might ask, definitely if you look at the past 2.5 years, we are at those bullish extremes. But if you go a little bit further back in time, like 2015, there's two times when we had a very nice bullish COT extreme signal. We are not at those levels at the moment. So from the COT extremes perspective, we can state that if we look at the longer term perspective, we can easily find euro at lower prices in the medium to long term. And of course, if we see that trend continue, then we would definitely expect a much greater bullish extreme to come. The next market will be the Euro Japanese Yen, where we have a 23% change in commercials positions. You can see that change size over there. Again, we're talking about a bullish COT change signal, 32% in large speculators. If we move on to, well, not the 5 year chart because we have a shorter COT history over here, but the maximum available COT history chart, then you can see that we are more or less in between the two extremes. So there's not much to talk about. And as I said before many times, when you have a situation where you have a short history of COT data, then caution is advised to come to any conclusions about the COT extreme signal. So the Japanese yen will be the next market with a 21% change over there in commercials positions. You can see that change size over there. Again, much greater than average, bullish, and unfortunately for us, it came after we've witnessed a very nice rally in the market. If we move on to the 5 years chart, then you can see that we were actually at this relative bearish extreme back in August of last year, which coincided with that top in the market. We moved away from those levels. We're getting closer towards bullish extremes, but of course you may see that there's still some significant space left for traders to reach those extremes, both for commercials and large speculators as well. Nevertheless, of course, if we talk about the coronavirus and its effects, then we should not be surprised to see the Japanese yen gaining strength. Moving on to large speculators COT extreme, we've got the rough rice on top of our list with a 453 report extreme in large speculators. What's interesting to see if you look closely at the charts, basically in the past 2 weeks, we've seen large speculators and commercials changing their positions in the same direction, while only small speculators were increasing towards actually they've just became net short at the moment. This in itself seems to be a bullish sign. Nevertheless, if you look at the commercials and large speculators charts, we can state that they're at a bearish COT extreme. I would put more emphasis on that, to be honest. That's my opinion. And if we look back in time, we can see how well these bearish extremes were able to signal tops in the market. There's multiple examples of that. In the past, we are at a very significant extreme, and I wouldn't. So maybe this time we can say that small speculators are actually going in the right direction, or possibly there are some commercial participants hidden inside small speculators category, which of course is more obvious in livestock, for instance. Moving on to soybean meal, we have a 207 report extreme over there. Here we are talking about more of a bullish COT extreme situation. And of course, you may see there has been a bit of a rise, nothing huge. We have had this bullish extreme situation for quite some time, since February of 2019, meaning for basically a year now, and without any significant reaction from the market. So caution is advised, but in the long term, one might, of course, come to the conclusion, analyzing this COT report, that we are maybe ready for higher prices to come. We talked about the euro, so we're going to jump over that and arrive to our last market for this review, which is the sugar market, with 167 report extreme in large speculators, 170 in commercial. There's no question that this is a bearish COT extreme, and we've been witnessing in the past few weeks that the market started to decline. Of course, there's some more space left for it to reach even deeper levels. And you can see, of course, from historical example here from 2016, how well that signaled a top in the market. So beautiful signals. Of course, caution is advised. These extreme signals can go on and on and on for many, many weeks before the market actually reacts. This is measuring stresses in the market. One thing's for sure, if you are interested in a long-term perspective, then of course I would say that there's a higher chance that we will see lower prices coming in the sugar market. So that was all for this COT review. Of course, don't forget that we've got a lot to do here at COT Base concerning the commitments of traders reports. You may look at new COT report types, other data types, and of course analyze all sorts of data sets. You can look at all the market categories available, and you can dig deeper in analyzing the COT changes, the COT extremes, and you can also look at our wonderful long-term trend indicator, and maybe add the volume and open interest analysis, which is not necessarily based on commitments of traders data, but I would see it as a very good supplemental tool to commitments of traders analysis. So that was all for this review. I thank you very much for being with me. I hope you enjoyed it, and I wish you a pleasant weekend. Take care. Goodbye.